Autodesk is one of the world's leading design and engineering software providers. Its products are perhaps the most widely used general design software tools in the world among the architectural, engineering, and construction industries. Autodesk's offerings are mission-critical for its customers, who would be hard-pressed to design their next buildings without its products. According to market research firm JPR, Autodesk has around 30% market share in computer-aided design and engineering software. This makes it the #1 system on the market. Its largest competitor is France-based conglomerate Dassault, which has a 22% share. In addition to engineering and manufacturing software, Autodesk also offers 3D modeling and other content creation and project management software for the entertainment and media industries. Like many other technology companies, in 2016 Autodesk decided to transition from its legacy perpetual licensing model to a subscription model. The transition is nearing completion, and the subscription model was found to boost revenue by 90% over the traditional model in FY 2021. However, during the transition period, especially fiscal years 2017 to 2019, Autodesk's historical financial results were heavily impacted by the switch in business model. Results appeared weak during that time, due to a lot of subscription revenue being deferred, resulting in lower upfront sales. But the initial dip has reversed since 2019 to a healthy upward trend. The move to subscription makes sense. I always love companies with stable and recurring revenues, so does Wall Street. Why? Because recurring revenues are constant and predictable. You don't have to spend time and money winning business over and over again. This leads to snowballing revenues, thick margins, and a typically lower risk profile. Results since that time compared with earlier figures show much higher returns on cash reinvested in the business. Plus, Autodesk has a lock on the architecture and construction design software market because architects and engineers are trained to use the software early in their careers. Switching to a competing program isn't very attractive to professionals who have been working with Autodesk for years and who are able to communicate with their counterparts using the same software. The time, effort, and psychological toll of switching to a competitor would hardly be worth the trouble. So overall, the software business, recurring revenue, consistent margin, and strong free cash flow make Autodesk a great business to own for long-term investors. What makes this stock more interesting? Every business has its difficult days, and November 24, 2021 was one for Autodesk. In its third quarter results, Autodesk reported that it had lowered the guidance for the fiscal fourth quarter and projected sales would not exceed analyst forecasts for $1.2 billion and could fall below that. Management blamed global supply chain challenges as the catalyst for Autodesk's soft third quarter sales growth. Manufacturing and shipping delays mean that Autodesk customers aren't able to move their products fast enough. This lowers their revenues and therefore cuts into the amount they're able to spend with Autodesk in the future. The company believes these setbacks will persist in the current fourth quarter, but the CEO doesn't believe sales growth is permanently impaired. He expects it has just been pushed out a quarter or two. Once supply chain issues have been resolved and its customers are back on a better footing, they will resume their normal sales volume with Autodesk. Investors, however, disagree. They hate negative surprises, especially from elite companies like Autodesk, and they quickly bailed out following the third quarter announcement, sending shares tumbling 15.5% following the announcement. Do you remember that Autodesk is primarily used for the architectural, engineering, and construction industries? Overall, there is a long-term secular increase in the sector driven by global demand for infrastructure and buildings, although, admittedly, the construction process has been hampered by inefficiency and low productivity improvements. Autodesk will grow by helping drive productivity through the digitization of the design, construction, and asset management process. During Investor Day presentation, Autodesk's CEO said Autodesk expects to deliver a compound annual revenue growth rate of 16% to 18% over the next 3 years. The company also reported a free cash flow margin of around 30% this year. However, because of short-term supply chain challenges and its impact on Autodesk, the company is currently trading at 13 times on its next year's revenue. This is a cheap multiple for a fast-growing and high-margin software business. By investing in Autodesk today, I can buy a business that will see double-digit growth and have a 30% free cash flow margin. I believe this is a good deal for long-term investors who want to own a great business for the long haul.